that is catching your eye is definitely the OMCs. We have some of these. You just pull up the intraday chart. IOC, HPCL, BPCL, all of them have come up the high point of the day. Varinder's with us. Varinder, we were expecting some kind of price hike. What are you picking up?
Well, this is clearly not a good news for OMCs. Remember, after the OPEC decision coming in crude, global crude has surged nearly 15%. So people were thinking, and there were various estimates by most of the analysts on the street, that today, because today is the day when the retail, price revision happens, and you could see 6 to 7 rupees hike in terms of petrol, in terms of retail format. Some of the analysts were suggesting there could be 3 to 4, but the situation for OMCs was very delicate because you were seeing a lot of things happening in the global arena for them. So even if 3 to 4 or any price hike happened, it could have been a breather for these OMCs. But now what we are hearing is clearly with sources, from Cogensic saying that the government may advise all these OMCs to defer fuel price hike, and government may ask oil marketing companies to increase prices in a protected manner. Now, let me tell you, all these OMCs, if you have to watch out for earnings, there are 3 important drivers for earnings. One is the cost, of course. What is cost for them? Cost is the crude oil.
Correct.
Crude oil for them has been gaining steadily. So clearly, the cost for these OMCs is moving up.
Correct.
That will impact the refining margins. The refining margins, what most of these companies have been telling us, that it could be anywhere between, $4.5 to $5 per barrel for the second half FY17. This is what HPCL, IOC have told us. But now, if crude price surge continues, then refining margins will clearly be impacted. What could save them? Inventory gains. But inventory gains is such thing. We never looked at inventory losses while calculating the real numbers in terms of the core GRMs. So I'm sure the analysts on the street have already accounted for any inventory gains coming in. But the core GRMs will get impacted because the cost is moving higher. Second important thing is the marketing margins. Now, marketing margins, REMA has been telling us, that that the 0.75% discount which has been there, yes. And huge competition coming in from private players. So the marketing margins for these companies will also get impacted. Third, of course, is that because of this demonetization, you are seeing a lot of pressure coming in. Whether it's CVs, whether it's autos or anyone, then the volume growth will not happen. I'm comparing numbers, or I'm stating numbers in respect to what these OMCs have delivered in the last 2 years. In the last 2 years, they have the best time in terms of whether it is volume growth, whether it is GRMs, whether it is marketing margins. But now these 3 things, the GRMs, marketing margins, volumes, are looking at that they will get impacted. And of course, this is happening because of the political climate what we live in, and hence you are seeing that the price rise is not coming. If not 6, 7 rupees, people were thinking 3, 4 if it comes, that was also bad. But now if you're saying that the price rise will not come and it will be in a protected manner, this is clearly negative for these OMCs. My fear is that the GRMs, if it goes back to the $3, $4 per barrel, and that will be a bad news for most of these companies. And I'll be looking out for the volume very, very closely for most of them.
I guess the government does not